The Japanese index opened mildly in the green. From there, it has dipped into the red at the low point of the day.
There's some old FI favorites have started to see big delivery buying.
This will count as a flat opening. 11,310, you may say, is the first tick, and on the Sensex, it's 37,600.
It will not surprise me if earnings, put in a 20% CAGR over the next 5 years.
ITC on the input of goods and services, which is lying unused as on 31st March 2019, should be reversed by real estate developers.
Effective 4 p.m., there'll be no MAX operations in Indian airspace.
Nifty, which is absolutely flat, and we have the mid-cap index, which is giving up a little bit of gain, so down around 0.4%.
MAX fleet is insignificant to the total narrow-bodied fleet we have, so it's not going to make any significant difference on a standalone basis.
Blackstone-backed Embassy Office Parks is looking to raise 5,000 crore rupees from the market via this REIT listing that they are going to announce today.
Bank Nifty has been doing very well all through the day. It's up a full 1% at the day's high.
Okay, it's the Bank Nifty show. Let's put it this way, HDFC Bank show, and that's carried the market where it has. Not the Nifty as much, up 29 points, but the Bank Nifty up 407 points. As strong as trend days come or trend weeks come, this is by far the strongest that we have seen in recent memory, or perhaps in a long memory. Sonia, hi, good afternoon.
Hi, good afternoon. And when you see HDFC Bank rise almost 10% in a month, when the month is not even 10 days done, you get a sense of which way things are headed, right? I mean, is this something that is going to, has the leadership changed? I mean, are banks going to be the leaders from now?
You know, the point we were discussing with Rhythm as well, this is the bit of a melt-up which is happening in the market now. And, remember we were discussing HDFC Twins yesterday, Sonia. When the FI money is chasing stocks, it will first enter these stocks. HDFC, HDFC Bank, IndusInd Bank, TCS, of course, has underperformed because the rupee has been just way too strong. So, obviously, TCS, Infosys, they have not participated in this rally. Look at the way Yes Bank is rallying. So, I think from correction of about 10% to get back to all-time high, that's what HDFC Bank does. That's what HDFC does, and that's what you've seen. Now, this is a move in which, again, mid-caps have started to underperform. As we speak, yesterday the mid-cap index was almost in red. Today it's deep in the red, down 100 points right now. Advanced decline is at about 1:2. But like we discussed in the morning, we're still at around 11 p.m. The party is still on. It will continue for some more time. But you better be, prepared to take some profit. If you've got 1,000 points on the Bank Nifty, 400 points on the Nifty, 500 points in a matter of 10 days, you should be ready to book some. But trade the screen. The screen is telling you that every dip is being bought, especially on the Bank Nifty. Just pull out the contribution plate on the Bank Nifty, and that is where you will see the magic of HDFC Bank. Now, you could argue that that's not healthy, but your job is to make money in this market, and especially at a time when you have weekly options which are giving you so much money, 20 rupee options turning into 80, 100 rupees in a matter of a day. Of course, it works the other way around as well. But 231-point contribution from HDFC Bank alone, Sonia. And I think in the last 30 minutes, ICICI Bank has started to move once again. The last bit of Bank Nifty move is courtesy ICICI Bank, because that was the one which was underperforming in the morning. But now you started to see ICICI Bank also moving up.
So I think in the mid-cap space, the party has already reached 12 p.m. But in the Bank Nifty, perhaps it's still around 8, 9 p.m. when the party is raging. No, it's somewhere around 11 p.m. Let's put it that way. But yes, in the mid-caps, the party is over. No, what happens even with a move like this is, DIs start to book profit. That you've seen that. I think today's move. Today, by the way, there's a block deal on HDFC Bank, so you'll have more than 2,000 crores of delivery number in HDFC Bank. More than 2,000 crores. Now, it will be interesting to see the FI number as well. The gross numbers will be extremely high, because we are told that the buyer is also an FII and the seller is also an FII. So that way, the gross number is going to be extremely large. But the net number is also going to be big, because at the end of the day, you can't move stocks like IndusInd Bank, ICICI Bank, Yes Bank without, the force of this FI money. But what happens in this market is, because, DIs are booking and the move is too strong, it gets concentrated into large caps, and the mid caps start to underperform. What we were seeing till about just 1 week back, before this carry trade started, was a healthy market, because what was happening was a lot of mid caps were doing well, portfolios were doing well. Now, all of a sudden, what's happened is that, again, over the last 1 week, you're looking at your portfolio and saying, okay, hang on, perhaps it's
only if I had HDFC Twins and the IndusInd Bank of the world in my portfolio, and I'm doing well. Otherwise, in the broader market, and today a lot of stocks, in the broader market are hitting lows of the day. If you see names like, say, a V-Guard or a EIL, Godrej Consumer, some of the good quality stocks.
Heidelberg Cement.
All the cement stocks, Biocon, Apollo Tyres, most of these stocks are hitting lows of the day as well. So the screen right now is once again getting a bit divisive. You have the large caps, which are completely in a party mode, and you have mid caps, where you have had the rally, but they're now seeing correction once again.
Okay, so two different trends is what you're seeing. The large caps doing pretty well, while the mid caps sulking. But it is the last hour of trade, so let's tell you what's lined up on the show over the next 1 hour. Markets are off the day's highs, but the Nifty Bank surges to trade at record levels, driven higher by the likes of HDFC Bank, ICICI Bank and IndusInd Bank. The mid caps underperformed today. We discuss the market fundamentals and key trends with SP Tulsian of sptulsian.com, market expert Prakash Diwan and Kunj Bansal of the Sarthi Group. And the mid-cap outperformance over the last couple of weeks following the massive sell-off earlier. Are mid-caps at the cusp of a recovery, or is the party over? What's the way forward given triggers like Brexit and our very own general elections? We'll ask Ravi Sundar Muthukrishnan of Elara Capital. And as always, our technical experts will take you through the key trading strategies of the last hour of trade.
In fact, as we speak, there's fresh up move now beginning once again on the Bank Nifty after that profit-taking move, which normally happens sometime between 215 to 230. So after that, just a minor dip that you saw, it went to 28,900, remember? From 28,900, corrected just a wee bit back to 28,800. Now, once again, making a bit of a move up. Well, we have our technical experts joining us for last hour trade. Sudarshan Sukhani and Mitesh Thakkar now join us. Good afternoon. So, Sudarshan, it's a bit of a parallel market running here. There's Bank Nifty on the one side and everything else on the other side. How do you approach a market like this, and what are your stock calls now?
Yeah, good morning. Good afternoon. The Bank Nifty had a lot of drama today, and I don't know how much it will continue. But the market sense is being given by the Nifty and the mid-caps, which you talked about. So I think the irrelevance of the Bank Nifty is proved at this point. This is HDFC Bank. There must be some other reasons for it. It could be anything, including weekly options expiry. I would keep the Bank Nifty aside. Once we do that, the Nifty is essentially choppy. It's 30 points up. It was 10 points down. So it is going and moving in a narrow range. And it is doing this in spite of the Bank Nifty's magnificent performance. And the mid-caps are underperforming. So for me, the theme is that you should have been long. Today is a very good time to take profits off the table, exit your long positions and be patient. Markets will become choppy and they should hopefully consolidate. So the Bank Nifty is a complete no-go for me. If you've been able to ride this trend, good for you. But at this point, exit. This is a cautious approach, but I think it's a wise approach.
Okay, well, I guess, you have exhibited caution at several points when the rally has been perhaps unwarranted. I don't know if you'd want to use that word, but at several points you've said that it's better to be a bit cautious at these higher levels. Mitesh Thakkar also joins in. Mitesh, what would your own view be? After a 420-point rally on the Bank Nifty, you expect to see some exhaustion at higher levels, or do you think the run can continue? And on the overall index itself?
Not yet. I think in the morning also I was emphasizing this point. Getting past 28,300, 350, which were the earlier highs about 8, 9, 10 months back on the Bank Nifty was important. One, there was a lot of consolidation and distribution at that level. If you look at the historical charts 10 months back, there were 5 or 6 highs made around levels of 28,300 on closing basis. And then we had a significant correction from there with the Bank Nifty dropping to about 24,500. So getting past that level definitely means that there should be follow through. I was saying this in the morning. I said 29,000, 29,250 should be the minimum we should look at. We are close to those levels. I think you may argue about the move being polarized by HDFC Bank, but then again it started participating only today. But the rest of the move was carried by PSU banks as well as Axis banks of the world. And I think this circular and this rotation will keep on happening. So I would not be really worried about that. As long as you are about 28,300, 350, I think now a fresh chance to enter would be on a 200, 250 point kind of a decline. Having said that, the calls which I have on the upside are a buy on BEML with a stop at 930 for targets of 1,000, and Bharat Forge is a buy. Keep a stop at 533, look for targets of 565.
Okay, Sudarshan, we didn't get your stock calls.
Oh yeah, yes. The Bank Nifty actually puzzled us all. the Bajaj Finance is a buying opportunity, and that's a stock that has been an outperformer. It's been a slow and steady progress, so there is some momentum in it, even if the markets consolidate, and which they should. The second stock is Manappuram. I spoke about it earlier also. Manappuram is a small cap stock which has been having a steady rally. That rally continues. Consider buying it. There should be more steam. We are only talking about a choppy and consolidating market, and some stocks will outperform there. The third is a buy again, Hindustan Zinc. While many metal stocks have been underperforming, this one has kept its head above water. So there is more momentum. So look for mid-cap stocks where some momentum continues to exhibit, and essentially avoid the Nifty.
Okay, essentially avoid the Nifty. By the way, just talking about mid-caps underperforming, there's some mid-caps where there's a fresh breakout which is on. For me, the stock of the last few days has been Canfin Homes. And once again, this is a stock which is having a fresh breakout. This looks interesting because this stock, you're looking at a market where a lot of good quality stocks which had corrected are now seeing second round of buying. So that's the one which has made a fresh breakout right now. We have SP Tulsan of sptulsan.com and Prakash Diwan joining us. Good afternoon. Ms. Tulsan, first your thoughts on a stock like Canfin Homes. You think it has some more room to go? Just like we discussed Escorts, you reckon it could perhaps get closer to its previous high? I mean, still a lot of distance to cover.
Shanuj, that's right, that a lot of distance has to get covered, but actually post this GST reduction of the under construction flats, in fact all the housing finance companies, we have been taking the positive bias, positive view. And if you really take a call on few of these three PSU housing finance companies, that is GIC Housing, Canfin and LIC Housing, in fact all three are looking quite good, because if you really see the price to book or maybe the earning multiple, they are seen to be ruling quite low, and they have always been conservative in on their asset quality is seen having maintained. So yes, the things are looking positive for the Canfin Home, and amongst the three PSUs, which I have said of the lot, rather the pecking order should be Canfin Home, LIC Housing Finance and GIC Housing Finance. But yes, keeping positive bias per se on the housing finance companies and these three PSU housing financiers.
Okay, by the way, the stock that Mitesh just recommended, BEML, is having a huge up move right now. It's up almost 7%. He has a target of 1,000 rupees on that stock. It's already, I think, hit 965, 963 to be precise. So big moves coming in there. Prakash Diwan also joins in. Hi, Prakash. Afternoon. There's so much ferocity in the banking space, but the stock that has caught everyone's breath away is Yes Bank. Almost a 40% return now this year. Yeah. Do you reckon there could be more on the cards?
Possibly, but if you ask me whether it's going to be a straight line move to those 300 levels, which very deservingly this could be at, the answer is it could probably see a little bit of a pull down before it moves to that pull back on the 300 zones. For the simple reason that the March end numbers only are going to be very critical, because that's the last big milestone that this bank would need to cross in terms of, exercising its past of sorts. So I would wait for that and love to buy it if I get it closer to 200, 210 zones.
Okay. Nestle is the other stock breaking out right now. That's up about 3%. So that one's at the fresh high of the day. Pidilite since morning has been up. That's also looking quite good. There's a bit of a move happening in UPL. That's also making high point of the day. Eicher Motors, just a one-day correction after that big move, and that stock back to winning base. So looking quite good. And of course, Reliance as well, doing quite well. So let's see how Reliance moves. Mr. Tulsan, this move on HDFC Bank, of course, you would not be surprised because it's one of your top picks. But the kind of volumes it's generating, and it's obvious that there's a lot of money chasing stocks now, the large cap stocks. You reckon it has higher levels to go from here in the near term?
Shanuj, in fact, if you take a fundamental view on both the HDFC Bank, HDFC Limited and HDFC Bank, HDFC Twins, both have risen by maybe about 7%, if I'm not wrong, in this week, in these first 3 days. And actually, if you really ask me, the fundamental view is one thing where we have been, with folded eyes, have been taking a blind buy call on these stocks from a portfolio point of view. But as I said, that they have risen, HDFC have risen by about 110, 115. HDFC Bank has risen by about 125, 130. And in fact, I will correlate this with the Bank Nifty movement. If you really see the situation now, I think this has to do largely with the bank option, weekly option expiry management. If you see maybe the advanced decline now of about 10 to or maybe 9 to 3 in the Bank Nifty, that means 3 stocks are in negative and the 9 are in positive zone. But of those 9, 4 are having contributed less than 2 points to Bank Nifty when you have seen a rise of 400, and single-handedly HDFC Bank has contributed 275 to this Bank Nifty gain. So definitely this has to do with the weekly option expiry management, and I won't be surprised to see the share correcting again, maybe by about 50, 60, 70 rupees in this next 1 week or so, because you cannot have again Bank Nifty have risen by over 1,000 points. I think this on Monday, we started Monday with 27,900. Today, the Bank Nifty is at 28,900. Thanks to HDFC Bank, which has contributed maybe about 700 points or 650 points to this gain. So yes, if you take the technical view, then probably, and even same thing is with the Nifty. If you see the advance decline, advances of about maybe 16, 17 stocks, decline 32, and of this 16, 17, about 7 stocks are contributed less than 2 points to Nifty gain. So yes, this has to do purely with the expiry management. Tomorrow we will be seeing the aggressive expiry happening on the Bank Nifty, but thereafter we are keeping cautious view on both HDFC and HDFC Bank to see a correction of maybe about 50 to 75 rupees in both the stocks, which won't surprise us. So look to buy as an investor at that point of time, and not now.
Okay, well.